Mr. Rathod is a serial entrepreneur having a business experience of more than 18 years. He started his stock market journey around 2002. He is a system trader and had devised more than 100 algo tradings. He is also a 13-time winner of Zerodha 16-day challenge. Over to you, sir.
Hey, thanks a lot, Aditya. A very good morning to all of you. And I mean, you guys have taken time out on a Sunday morning, right? So that's showing some serious commitment. So good on you guys for doing that. Okay. And we're going to start very soon. Just give me 1 second while I just set things up. Okay, if I can just have everybody's videos on, okay, just to have some faces to the names, that would be great. And also, if you could type in the chat box which city you guys are from. Very quickly, and we'll begin. Okay, so we have Yash from Indore. A few others from Bombay. Yeah, of course, Imran Bhai is from Ahmedabad. Go back a long way. Good to see you here, Imran Bhai.
Thank you so much, Jai Bhai. It's very lovely to see you screen today.
Superb, superb. All right, Calcutta, Kolkata rather, Lucknow, Mumbai. Okay, I believe there are a couple of people from Delhi as well. All right, great. So we have a fair mix of people from various parts, so that's fantastic. All right, thank you for taking the time once again. All right, and I hope that this investment of time will be worth it. I'll try my best for sure. All right. This is a fairly long presentation, so we may go a little bit fast. All right. Suggest you all to keep your pens and papers handy, okay, or if you do it on Word docs, which is what I prefer to do for webinars, okay, then that's fine as well. Take notes, okay, as much as you can, because I'll be rushing through, and hopefully this will help you to become a profitable trader. We'll have questions right at the end, okay, so I do want to interrupt the flow of the conversation and the presentation. So there is a dedicated time slot from 11:30 onwards for the Q&A. So we'll have that. Okay, so whatever questions you have, just note them down and I will address them as we go along. Yeah. Okay, so the title is, of course, how I became a 13-time winner of the Zerodha 60-day challenge. Some of you are aware of this. Okay, this is a standard disclaimer. None of the information in this document is an offer to buy or sell securities. It's purely for education. Okay. Trading and investing in the markets, of course, involves significant risk, and you should consult with your financial advisor before taking any investment or trading decision. So this presentation cannot be used anywhere else. So it's strictly meant for this webinar. It cannot be recorded as well. So kindly, adhere to that. And we are not SEBI registered investment advisors or research analysts, and neither are we required to be so. And we do not provide trading tips or calls, and neither do we invest money on behalf of anybody. Yeah. So this is just some standard disclaimer that I have to go through, just so that if people's expectations are set, and we move on. So first of all, what is the Zerodha 60-day challenge, right? If I'm a winner, like what am I a winner of? A lot of people are not aware of it. So it's basically an award given to those traders who are net profitable at the end of each separate leg of 60 trading sessions. So Zerodha is my broker, has been for several years now. Okay, so every 60 trading sessions, which is 3 calendar months, if I'm net profitable, okay, they will give me a certificate, and anybody else also, whoever is profitable. And like I keep saying, you can lie to the whole world about your trading and investing profits and losses, but not to your broker. Okay. So 3 calendar months times 13 times, is 39 month period of profitability. So I must be doing something right. That's typically how, what this is about. I think this is a bit distracting. I don't know how to get rid of it. Yeah, okay. So you learn something new every day. All right, so figure that out on the go. Let's move forward. Okay, so we've already gone through this. So I'm a profitable trader since 2017, okay, last 4 years, and a full-time trader since 2020, okay. and I'm a firm believer in backtesting and discretionary trading systems and non-discretionary as well. But basically, trading systems which have rules inbuilt. Okay, that's the bottom line. These are the winner certificates: 11 times in the equity and F&O segment, 2 times in commodities. That's top trading commodities for a long time now. I mean, I have to have a life, right? 9 commodities markets start from 9 in the morning to when they end at 11:30 in the night. So I'm like, only equities is good enough, and you don't need to trade commodities. Everything is fine. Okay. All right. So my thoughts and emotions along the way, of actually doing, or rather being on this journey, there was fear. Okay, there was self-doubt. So fear about the markets, about losses, about not being profitable. So a lot of self-doubt. I think most people who are in the markets who have not learned and who have gotten, even if they have learned and gotten, initially there will be self-doubt. It's totally new field. Okay, you don't really know what you're doing, and I mean, sometimes stock prices and movements can seem very random. So there's a lot of self-doubt. Okay, anger as well at the markets. I don't know how many people can relate to that. Okay, but if your stop loss is taken out or you make a loss, you initially, at least, you tend to blame and look for blame elsewhere. Okay, you don't look at yourself. You generally tend to blame, "Arey, market ne mera paisa le liya," whatever, that kind of typical thoughts come to mind. All right. Um, there were periods of hopelessness as well, where if the losing streak becomes quite a bit, okay, and you've been consistently losing money for quite a few years, it may not be big money all as well. It doesn't really matter. But the fact that you are not able to crack it, okay, or you're not able to become profitable, does tend to, a situation of hopelessness a lot of times. Okay, and then of course you take a break and then you come back. That's typically how most traders, operate. They'll take a loss. They'll go away. They'll say, "I'm never gonna take, look at the markets again." And 2-3 months later, when the pain has ebbed, so to speak, okay, and they've found money from other sources, okay, or from the job, or their business, then they're back again. Okay, so markets have a way of pulling you back in, and especially if you make losses, then pulling in, that feeling is because you want to recover, right? You don't want to accept defeat, and that's fine. That's what got me. That was what always kept me going as well. I was like, "Boss, I have to crack it. This is the last thing in the world that I do. I have to crack this puzzle." And the more people said it, that money cannot be made, the more it told me that no, now though I have to do it. I'm pretty sure a lot of people can relate to that. If you can relate to that, just type R in the chat box. Relate. Or having been through some of these emotions. Yeah, relate. Absolutely relate. Okay, great, lovely. So there was also despair. So too much of hopelessness, too many periods of hopelessness can lead to despair. Okay, so there was that as well. That somebody is making money, but I'm not able to do so. So that's fine. And the markets will test all emotions. It really tests you as a person. So if in life you find adversities challenging or whatever, then that is your weak point, and the markets have a way of finding whatever your weak point is and hitting you over there, not because they have anything personal against you, but that's just how nature works. If you constantly make a particular kind of mistake, if you trust too much, if you have a habit of trusting too much too soon, and that leads to some problems, then that pattern will keep repeating till you learn and till you start correcting, then that disappears, even those situations will stop coming in your life. So that's what I believe. Not knowing what to do, again, like clueless. But one thing, so these are all the negative emotions, but there were two things which really helped me. Okay, I always took personal responsibility for failures. So there were times when people lost money for me. I'd given it to a broker, a so-called super trader and whatnot. And he went ahead and he lost a significant amount of money in a very short span of time. While I was extremely angry at me, I was more angry at myself. I'm like, how could I let it happen? Look, it's your money. You have to be responsible for it. The world is there. You can't, even markets may fall, they may go up. I keep saying, markets will do what they have to do. Do you have a plan for anything that the market can throw at? Last year was a very volatile year. In fact, the most volatile month and the most volatile period in history. Okay, the months of February and March. But they happen to be the most profitable ones for me. Why? Because irrespective of what the market is doing, I knew what I was doing. So it doesn't matter. And if you know what you're doing in all fields, you will make money. That's just how it is. Competence, over everything. Hope, that was, and this is highlighted and in bold, because that was something that always kept me going. I always am eternally, quite an optimistic person. Sometimes irrationally so, but that's fine. You can't have it. You can't have the best of everything. And hope is what got me going, because I knew that somebody is making money. If nobody was making money, this would be shut, right? So somebody is making money. I just need to figure out how they are making it, or I just need to figure out a way for me to make it. That's all. That was that hope which kept me going. And the losses didn't bother me beyond a point. Of course, temporarily I was, those emotions were very negative, and I was depressed with those loss making periods. But I always knew it's money. It can be recovered. If you can lose it, you can make it as well. And here, nowhere else is this more applicable than in the stock market. Once you know how to make money, you are here for the next 20, 30 years. In businesses, most other businesses, things can change. A lot of things are not in your control. Markets may change. Your business model may be completely outdated. Okay, even though your product may be good, but there might be a better product which somebody else may come up with. In the markets, none of that exists. What worked in the 1920s still works today. And what works today will still work 50, 60, 70, 100 years down the line. How do I know this? Been there, done that. Yeah. Okay, let's move on to the next. So these are my building blocks for trading success. Okay, I will go through one of them. I will go through all of them one by one. So the first and most important point is follow the trend. Okay, now what is the trend? A trend is the general direction which a stock has the tendency to go towards. Okay, so it's a general direction of the price of the stock. All right. These are all technical parameters. So these are all based on charts. Okay, it's got nothing to do with fundamental analysis. Is fundamental analysis very difficult for individuals to cover and track? So we're only going to restrict ourselves to something that is easy to do and quicker to do. Okay, which is technical analysis, which is the art of reading price charts. All right. So a trend is something where, so if a stock, let's say, is doing this, the tendency is to go up. The stock is doing this, the tendency is to go down. So this would be an uptrend and this would be a downtrend. Okay, the trend is your friend till it bends at the end. So this is a very classic saying, and it's totally true. I always say, do not enter any trade. In fact, the markets, if you do not know how to read trends, because ultimately the trend will tell you whether you should be long or whether you should be short or whether you should not have any position. If you do not know the trend of any stock, then you are just punting. Okay, you're just taking a educated guess or a wild guess in most cases that mujhe lagta hai, so I will buy it, or somebody has said it, or whatever. That will not work. And if you trade with the trend, you will generally be on the right side of the market movement. So I told you that February, March, the markets went down, yet they were the most profitable months for me. The reason is I was on the short side of the market. The market was going down, the trend was down, and I was on the short side. So I was actually making money when the market was going down. Okay, people who may not be aware that you can make money on the short side as well. I mean, even if the market goes down, they'll need to probably Google it, but that's possible. So you can make money both ways. Then gaps, people are very scared of, what if I, buy something and the market opens gap down the next day? Okay, it's a classic retail fear. Okay, and it used to be my fear as well, so I can relate to it. But if you are with the trend, then the gaps tend to be in your favor most times. Okay, most times. So you'll have massive gaps, but they'll generally be in your favor. Isn't that great? And a trend follower is wrong more times than right. Okay, but makes more money overall than most other types of trading. So my accuracy rate is less than 50%. Okay, and for one of my strategies, it is between 25 to 30%. Yet that is more than enough. I mean, all this 80% hit ratio and all of that is bunkum, frankly speaking. I have yet to meet people who have 80% hit ratio. So don't be fooled. Those are marketing gimmicks. They're trying to sell their stock tips or whatever. And there's a whole different business model out there which most retailers are not aware of. It's also an evergreen style of trading, which will exist till markets exist. So you want to do something which will be there forever. You want to learn something which will not become outdated. So follow the trend. Okay, the most important. That's why it's at number one. All right. Trade a system with a proven edge. Okay. So a system is, or a strategy. Okay, trading strategy needs to have a clear edge. Okay. So it needs to have a positive expectancy, which means that if you consistently trade the system and take all the trades that the system throws up, okay, you should be in a net profit at the end of a certain number of trades. It will not be every trade. Please remember, every trade will not be profitable. But at the end of, let's say, 40, 50 trades, okay, you should be in profits, okay, not in losses. All right. It can even be higher. So even it could be even after every 100 trades, that depends from system to system. But it needs to have a positive expectancy. If it does not, then every 100 trades, you're going to lose more money. It's simple as that. It's maths. Now the edge needs to be a proven one, okay, backed with data. So it can't be, okay, I think this strategy is great. Okay, that assumption has no place in the markets. Okay, it has to be proven and backed with data. So it needs to, so any strategy, any hypothesis that you have needs to be back tested over historical data of at least 5 years and minimum 200 to 300 trades. So if you have backtest of 5 years, but trades are only 50, that doesn't qualify. Then you have to go much more than 5 years. Okay, so you need any strategy to have a minimum of 200 to 300 trades, and that period needs to cover at least 5 years. Why? Because then you're more likely to cover most types of markets. In 5 years, you will have downtrending markets, uptrending markets, you'll have sideways markets, and if it's more than 5 years, even better. 10 years, that's beautiful. Why? Because a strategy may work in the last 2-3 months data, okay, but that may be an aberration. The 2-3 months may be supremely trending, where any strategy would have worked. And then when the markets default to their mean or to their average, and the trending period stops, and you start making losses, then you again look for another strategy. So avoid all of that. It needs to be back tested. I'm a firm believer. If this is one of the major reasons why I've been successful. I back test a lot. Okay, I've got Excel sheets which I have to make new Excel sheets, because the data is just so much that it will crash. It has crashed also in the past where I've lost certain data, so that's made me, I've got like each Excel sheet will have 40,000 KB of data and whatnot. Okay, if it has worked, why do we backtest? If it has worked in the past, it has a chance of working in the future. Not a guarantee, but it has a chance of working in the future. But if it has not worked in the past at all, it has absolutely zero chance of working in the future. Okay, so while they say past results are not a guarantee of future results, but they are a fair indication. Okay, I would much rather have past results working for me than go into something without it, because then you're going blind. Then it's luck. And the system strategy can be yours. So you could have developed it independently, which is what I have done with most of my strategies, or they can be learned from others. Okay, so that's also fine. Initially, learning from others is fine. It's short, so it's a shortcut to success. And then, of course, you will, as you become more experienced, you will develop your own strategies as well. Hope is not a strategy, okay, and neither is gut feel. Okay, so you can't say I hope the stock will go up. Mujhe lagta hai, all of those, that verbiage will not work, and neither is gut feel. So a lot of people think, mujhe lagta hai, I think, meko aisa lagta hai, I have a gut feeling that this stock will go up. That has no meaning, it's because your gut is as good as anybody else's gut. Everybody has that. So, and most people lose money, with gut feel. So you have little chance of success. Keep losses small and let profits run. This again ties in with trend following. Okay, you have to keep your losses small and manageable, and let your profits, run like crazy. Okay, and they need to. If you don't nip your losses in the bud when they're still small, as they grow bigger, okay, you have very little chance of actually pulling the trigger. So if a loss is, let's say, 5% or 8%, 10% also, okay, you can still cut it. It won't be that bad. But if you allow it to become a 30, 40, 50% loss, do you think you're going to get out at that time? No. Okay, most losses are small initially. Obviously, it has to become big over time. It can't be, I mean, some exceptions may be there, but most cases, losses are always small, but they are not cut at the right time, so they become big. And small profits should always be given a chance to turn into massive profits, so long as the stock is behaving correctly. Okay, how many people here would love multi-baggers? Okay, so a stock going up, let's say from 10 rupees to 100 rupees or 1,000 rupees even. How many people would love a multi-bagger? Yeah, you can just type in the chat box, me, whatever, if you love it. Yeah. Very few takers for multi-baggers, yeah. All right, now we are coming. All right. But how many people actually have the patience to hold on to a stock? So from 10, the stock goes to 30. Do you have the patience to hold on to the stock? Because it's not going to go from 10 to 100 in one day, all right? So most people want multi-baggers, but very few people are even willing to hold on to profitable positions. That, in fact, is one of the biggest reasons why people are not profitable. Because generally what happens is, in losses, they will be very patient. So a 10% loss will be allowed to become a 50% loss, 80% loss. I have friends who have done that. Okay, 90% loss even. I have friends who from 2007, they've been holding RCOM and all, not sold, just forgotten about it. Okay. But how many people will do the opposite, which is become in a stock going from 10 to 100, 40, 50, 60, 100, 150, 200, 1,000 and not feel the temptation to exit? Most people do the opposite. As soon as there is a 5, 10%, 20% green in their profit, because the profits are so rare, they're like, boss, ye bhi nikal jayega, let me just book, So because you are getting the worst of both worlds, you are not just keeping the losses unlimited. I can even understand you keep losses unlimited, but then keep profits unlimited also. People don't do that, and then of course there has to be a system. You can't just buy anything and hope for this to work. I will even then not recommend keeping losses unlimited, but if at all people had to do that and they can't book those losses, but at least keep profits unlimited. Wo bhi nahi karte, so your risk reward will never be in your favor. That's what you need to do. And for a trend follower, 80% of your profits actually come from 20% of your trades. That's what happens with me. And you might think, wow, only 20%. But that's actually the Pareto principle in life, right? 80-20. 80% of your results come from 20% of your efforts. But which 20% you don't know. So you have to put in 100%, Eventually, when you see the numbers, you'll see that, haan, aisa ho raha hai. But on which trade you don't know. So you have to take all trades, trade a strategy which has a minimum RR, risk reward ratio of 1:4. Okay, so if you're risking 1 rupee in a stop loss, then the stock should have the ability or the potential to give you 4 rupees at the time of entry. It may not, because at time of entry, every stock has an equal probability of hitting the stop loss or hitting your target. Okay, that's fine. But eventually, over X number of periods, it should show if for every 1 rupee risk that I take, I am making 4 rupees. At the end of every 100 trades, if I do the Excel calculation, this is what I'm getting. If this is not the case, then you are putting too much pressure on yourself. Okay, so this can vary also. You can have a risk reward ratio lower than this 1:2. You can even have it higher than this. All right. And so one of the first strategies I developed, it generated 40%. It's an algo strategy. It generated 40% per annum. It was profitable only 13% of the time. So which means it was loss making in 87 trades out of 100. Yet it was giving 40% return per annum. Why? Because the 13% times that it was right, the risk reward ratio was 1:15. So for every 1 rupee of risk, it used to give 15 rupees of profit. Okay. Net at the end of 100 trades, you will always be profitable with this kind. So either the risk reward ratio has to be high or the win rate has to be high. Win rate is the number of profitable trades, so 30%, 40%, 50%, how many percentage of your trades which are profitable. Okay, so this can vary depending on psychology and but I prefer this. And for most people, this works well. Okay, this is a sweet spot that you should get. Make it mathematically difficult to lose money. Because the stock markets is all about maths. Okay, and it's all about getting the odds in your favor at all times. So keep stacking the odds in your favor through strategy. Okay, through a backtested strategy, through risk management and money management. Okay, you get all of this thing done. It makes it very difficult to lose money. If it makes it very difficult to lose money, then making money is the next obvious progression. Okay. So that's what you have to do. I mean, you have to look at it very scientifically. No, no gut feel, no nothing. It has to be very objective. Everything has to have clearly defined rules. Okay. So, okay, this is one of the most important points. And the next point, understand risk and money management. Okay. If you do not understand risk and money management, then the stock market will eat you for breakfast. Okay, every day. It doesn't matter how much money you have. All right, you can have $1 billion and you could lose it all. Okay, there have been documented cases of people losing 20 billion in 2 days. Also, I just recently read, a documentary on that. So the markets, but then that was no risk management, no money management. Okay, so without that, then obviously you are leaving the door open for, you're standing in front of a bulldozer. Obviously, the bulldozer is not to blame, you are to blame. Because the bulldozer is slow enough, you can get out of the way if you want. Okay, so this is Larry Hyde, a hedge fund manager, very successful hedge fund manager, and obviously very experienced, as you can see from his face. I have two basic rules about winning in trading as well as in life. If you don't bet, you can't win. If you lose all your chips, you can't bet. All right. So stock market is, so when we say betting, we are taking a punt, right? You are with every trade, it's a bet that the price will go up. It's not a certainty. It's a chance. It's a probability. So you have to bet first. Okay. Only then you can win. If you don't bet, you can't win. But if you lose all your chips, if you lose all your money, you can't bet anymore. So both are important. You have to do both. And this is more important. You have to ensure that you have your chips, you have your money. If you have your money, you will sustain, because the markets will give you tremendous opportunities in the next 5-10 years. But if you blow your account in the next 6 months, okay, you won't be there to see, those great, there might be difficult periods, there might be loss-making periods. You have to overcome that, and your strategy and your entire money management system, risk management system, everything has to come together to protect you when things are not going for you. Okay, it's like life. Is life just like a straight one way, up move? Like, you get out of college and then everything you do, you're just hitting gold, and you are, all the promotions you are getting, you are getting all the pay rises. Does that happen in life? Is anybody over here, if they can raise their hand, or if they can, type in, yes, it's happened with me, I would appreciate it. But I'm pretty sure the answer is going to be no, because life is also a roller coaster. So is the stock market. So we have to take the good with the bad. Okay, why is risk management needed? Now, return of capital is more important than return on capital. And to avoid this capital becoming return of capital. Okay, so return of capital more important than return on capital. If the capital remains in place, then you can have a return. Otherwise, it will be return of capital. Okay. So think about it like this, a cricketing analogy, right? If a batsman only thinks about hitting a six all the time, he's more likely to get out, right? To hit a six, you must still be not out at the crease. Okay. So you can hit sixes, but those sixes will be what? In the course of 100 deliveries, you may hit maybe 4 or 5 sixes, right? Most of the others have to be small, runs here and there, singles, twos, threes, you'll have more boundaries than sixes. Okay, so you have to go with the entire thing. You can't just, say, I'll make my runs only in sixes. It doesn't happen. Okay, and you must still be not out. That's the most important. If you don't spend time at the crease, you're gone. Now, big drawdowns are exponentially harder to recover from. What is this? So, a drawdown means from the peak of your equity curve, what is the maximum downside you have hit? So let's say your capital was 1 lakh. Okay, you made it 1,50,000, and then from 1,50,000, it's become 75,000 again. So that's a 50% drawdown, because from the top you have lost 50%. 75,000 you have lost out of 1,50,000. That's what is a drawdown. Okay, so if you have a 1% drawdown, 1% return is required to recover. 5%, 5%. 10%, then now you need 11%. Why? Because on 1 lakh, if you lose 10%, 10,000, now your capital is 90,000. You have to make 10,000 on 90,000, which is an 11% return to just come back to your original capital of 1 lakh. If you lose 20%, you need to make 25% to get back to zero. If you lose 30%, you need to make 43%. If you lose 40%, 67%. If you lose 50%, so 1 lakh ka 50,000 ho gaya, you don't need to make 50% more, you need to make 100% more. 50,000 needs to become 1 lakh. So you need to double your return on the remaining capital. And the difference between, after this, so it just goes crazy from 50 to, if you just lose 60%, so that's, that 10% more, you need 150%, and then so on and so on. If you lose 90%, you're already out by that time. You're a long-term investor. So it is extremely important to keep your losses manageable, so that the return required to recover it is also manageable. Okay, it's simple maths. Okay, risk management basics, I'll quickly rush through it. So you need to have adequate capital. Most investors, including me, okay, now I've made most of these mistakes. Yeah, so when I say, please don't think that I'm being very preachy or whatever. Most of the things that I've written over here, they come from personal experience. I have done probably most of them, if not all. Okay, some maybe missed out as well. But so we are all in the same boat. We are just at different stages. Okay, so I'm not superior to you or anything of that sort. It's just, you are at the stage where I was several years back, and you can be at this stage a few years later. That's all there is. Okay, so we need to have adequate capital. Most investors come in with very small capital, and they expect to make so like typically, if you, let's say, come in with a 1 lakh capital and you want to replace your salary, which may be 50,000, you need to make 50% return every month. Now that's impossible. I wouldn't say impossible, because anything is possible in the markets, but that's very difficult. You can't do it without taking substantially higher risk. Okay. Now, how much leverage does my system allow? Okay. And how much leverage does my mind allow? So there's all this talk about, these new margin rules which have come up and all that. They have not affected me, and they would not affect any serious trader one bit, because most serious traders do not take massive leverage. Okay. They are well within the SEBI rules anyway. Okay, SEBI allows 5 times leverage for intraday. I know very few people who take 5 times leverage in intraday, even if they are intraday traders. Okay, and I know very few traders, because ultimately what is important is not the leverage. What is important is your capital. Leverage is a double-edged sword. Okay, so it can magnify your profits, but it will also magnify your losses. So most people should keep leverage down to bare minimum initially. So there should be not zero leverage. Okay, unfortunately retail does the opposite, because they have less capital. They tend to take leverage, but that's not the way to do it. Okay, which markets to trade? You should know. Should I be an equity trader? Should I be into commodities, forex, Bitcoin also? Which is illegal right now, or rather there's regulatory uncertainty, which is why I am not traded. I would love to trade it, but because of the regulation, I'm not actually getting into it. But you can actually on charts, the same rules apply to Bitcoin as well. So if you learn, you can trade any damn thing with the same knowledge. How beautiful is that? Even gold, silver. So like recently, my cousin is supposed to get married sometime later in the year. So my mommy was asking me, is it a good time to buy gold? I simply had to look at the gold chart, and I said, yeah, good time. So that's how it is. So which segment to trade? Cash, futures, options, very important. For most people, especially beginners, don't look at anything beyond cash. Okay, don't look at intraday also. All right, which is the next question. Which time frame to trade? Intraday only if you're a successful swing, positional, or investment trader for 2 to 3 years should you even contemplate intraday. Okay, because this demands exceedingly high levels of skill and knowledge and psychology, which a beginner just doesn't possess. I don't do intraday because frankly, it's not needed for me. Okay, I make enough money in swing and positional to not need intraday. And at the end of the day, you want to make money as risk-free and as stress-free as possible. Okay, which instrument to trade? So like out of all the available, if you decide equity, okay, there are 5,500 odd listed stocks. Okay, so which out of those will you trade? Okay, you need to know that. Now, am I trading with the trend or against the trend? You can trade both ways. You can even trade against the trend, but that has a very different strategy, and this has a very different strategy. This has a very different exit point. The exit point will always be quicker. You cannot make big amounts of money trading against the trend, whereas here the exits can, it can keep you in the trade much longer. So you have to know what you're getting into. Am I solely dependent on trading income for my living expenses? Okay, so a lot of people want to become full-time traders, and I am a full-time trader. But I will tell you that this requires some amount of psychology, some amount of risk management to ensure that you can get your living expenses from trading income. I am getting it, but I don't expect my trading income to give me money month on month. I expect that I'll be profitable every quarter, okay, or even every 6 months. That is fine for me. That is my benchmark. That doesn't put pressure on my trading, okay? Because if you are coming from a salary background or you're used to getting money every month, okay, and all of a sudden you become a full-time trader, then you may have the same expectation, which may not be fulfilled, at your early stage. It can be done, okay, but the more, again, it's a matter of trying to make it as easy for you to become profitable rather than as difficult. Strategy with a positive expectancy and edge. Most people don't have this, okay, and this is where there's a huge problem. Okay, now is the edge proven with a back tested history? Again, we've discussed this, so very important. Am I in a good frame of mind to trade? This is also risk management. If you are in a revenge mode, if you just made a loss and you just want to recover that loss, that is not the reason to trade. Okay, you will be able to recover it, but not with that mindset. What is my risk per trade? How much am I risking off my capital per trade? Okay, how many open positions can I handle at a time? Can you handle more than 5 positions? Can you handle more than 10 positions? If no, then the answer is keep it restricted to 5 or 10. Where do I keep my stop loss? Most important. Most people don't know this. In my groups, that is why I mentioned, if you don't know where to keep your stop loss, please don't trade. Just observe the levels and see how they work. It'll add to your confidence and learn how much to buy or sell. Most people make a mistake over here. Like they typically have a standard, I buy 100 shares of everything. But 100 shares of a 1,000 rupee stock is very different from 100 shares of a 200 rupee stock. You're taking 5 times more exposure on the 1,000 rupee stock. So it has to be, the position size has to be equal so that profits in one can be offset by losses in the other, or rather losses in one can be offset by profits in the other. Otherwise, you'll be very lopsided. If my trade is in profit, how will I manage the trade? Most people want multi-baggers, but they can't hold on to the trade for it to go from 10 to 100, because a multi-bagger will go through, it will become 20, 30, 40, 50, 60, 70, 80, 90, and then 100. So do you have a strategy to keep yourself in the trade and keep yourself out of the equation? Okay, so I always say the most vulnerable part of any trading strategy is the trader himself. So the more he can minimize his discretion, the better it is. When will I exit the trade? So multiple ways to exit it. You should, be aware of it. So, okay, now this brings to the next point, learn. So this is one of the very big hedge fund managers, Mark Minervini. Okay, he said, you don't get a job and get paid as a brain surgeon and then go to school. First, you invest in yourself and your education. Trading is no different. The knowledge is what gets you the money, not the other way around. And you can start that education today. How many people can relate to this? If you can relate to this, and does it make sense? Like, you don't become a brain surgeon first and pay and get paid and then go to school. How many would like a brain surgeon to operate on you, first without getting a degree? No, right? So that's most important. Yeah, you have to learn first. But in the markets, unfortunately, the other things happen. People don't really give any credence to learning. So how many years of formal education is needed in any profession? If you just take school, college, it's 10 years of schooling. College is 2 to 5 years, depending on when you go for your professional education after that. And after this period, you have, for engineering, you have 4 years. A doctor, you need 5.5 years. MBA 2 years. Chartered accountant 3 years. PhD another 3 years. But stock market trader, investor, 3 months, 6 months, nothing is the answer in most cases. Why? Because there is no entry barrier. Okay, nobody asks you for any education. You can just open an account and start trading. Proclaim yourself as a trader or investor, which is what most people do. So this is to be avoided. Now here we try to save small sums in education and end up losing a fortune. Okay, now either we by way of losses or loss of gains or delayed earning. I've done that. Okay, so I started my trading career in 2002. Okay, made some money, lost some money, lost a lot of money, all of that. My first course was in 2011, paid course. Okay, and I thought I was being smart. Okay, I thought I was saving a lot of money by not paying for courses. I ended up paying much more in losses. Okay, and the time also. Okay, 2011 was my first paid course, and after that, I have for a couple of years, maybe yeah, courses were less, but after that, I've always invested in education. I've always done a lot of courses. I still continue doing courses even today. Even though I'm profitable. Why? Because there's always something new to learn. Okay, and the biggest sum I have ever paid for my course is 3.5 lakhs. All right. Did I? Was it the most value for money ever? Probably not. But did I learn something? Yes. So that's fine. And I don't really look at I don't see okay, I invested this much, did I get this much value? Because there's a lot of things that actually happen in your subconscious mind. Okay, everything you learn gets stored somewhere, and 2 years, 3 years later, you may create a strategy which will be a mix of everything that you have learned. So it's very difficult to on the spot tell to say that did I get maximum bang for my buck. Don't try to reinvent the wheel. Use shortcuts. Life is too short to do it on your own. Like I'm 41 right now. I may not look it, but I'm 41. I wish I had what I know now. If I was at this stage when I was 30, oh, that would have been something. By 35, by 36, 37, I would have retired completely. I mean, not retired because I love to trade, so I will continue trading, but I will trade less. I will trade passively, not as actively as I do now. So because ultimately life is to be enjoyed, right? So trading is a part of life and not a life in itself. It can be if you're extremely passionate, and it is. I mean, for me, it's work, it's passion turned into profession. But still, you always would like to do other things. Being an expert in one area does not equate to being an expert in another area. Unfortunately, this is another classic mistake, especially if you're doing very well in your career. Okay, so if you're a doctor, high profile doctor, a successful businessman, because you're already an expert and success in one area, you think that it'll be very easy for you to become an expert over here, and you try and do it on your own. It's very difficult. Okay, and the last point is learn from a trader, not from a trainer. Now it should be obvious, but unfortunately this industry is such that there are a lot of people who teach who themselves don't trade or trade very little. I have seen examples of that. I don't want to name people, okay, but and also eventually you come to know that okay, chalo, this is theoretical knowledge, and in the stock markets, theoretical knowledge is very easy. You can analyze a chart in post-mortem very easily, okay, and everything makes sense once the chart has been formed. But in real time, to do it, okay, and to have similar results, okay, not the same, because obviously you're always wiser in hindsight, but to have as close to results as you would if you were to just look at the chart from a hindsight perspective, that is the most difficult bit, and that a trainer cannot teach you. You need somebody who does it himself. Okay, and it doesn't matter whether you learn from me or anybody else, it doesn't matter, but learn from a trader. Okay, make sure that this guy trades, and he's not a phony. That's very important. Okay, take responsibility for yourself. Okay, if you want to be successful at trading or anything in life, you must take 100% responsibility for all your trading results, the profits and the losses. Now, most traders, investors, have a tendency to always talk about their profits, but very few talk about their losses. Okay, so you have to have both. You have to have the humility to accept both. Okay, do not blame your broker, your advisor, your financial advisor if you have one, your trainer, whoever you would have learned from, okay, or planning to learn from, your friend who may have given you a tip out of whatever knowledge he had, okay, and most importantly, do not and never ever blame the market. Okay, it is our lack of knowledge which is responsible for all our problems in trading. In life, trading is just a part of life. So I always believe that and I have seen all the rules applicable to life are applicable to trading. Okay, so if you get into something, let's say you get into a business half-heartedly without really understanding it, दोस्त ने बोल दिया ये business अच्छा है चलो कर देते हैं, and then you make losses. Can you blame that business? In that same business, there are hundreds, thousands of people who are successful. So it's not the business, it's our lack of knowledge. Yeah, and that responsibility is most important. Most people don't take responsibility for themselves. They are quick to blame other people, They are quick to feel sorry for themselves. Okay, victim mentality. Okay, कि मैं अच्छा हूँ, पूरी दुनिया ने मेरे को ये किया वो किया. All of that is bullshit. Okay, you have a role to play in the situation that you find yourself in life. Okay, and if it's your money on the line, who do you think should be responsible for its safety? Your broker, advisor, trainer, friend, market? Is you, right? Because you can only control you. You can't control any of these people. So the sooner you take responsibility, the better it is. How many people, from now on will take responsibility? Just type R for their trading profits, especially for anything to do with the stock market, will take responsibility themselves. Just type R, me, whatever, I. Yes, Dibyendu, fantastic. Yash, Florian, Nitin, fabulous, fabulous. It starts, the buck stops with me. Yeah. Okay. Create rules for trading, most important. Now you must have crystal clear rules for which strategy to trade, why you will trade this strategy compared to others, and how will you trade this strategy. So you may be working or whatever. Okay, so how will I trade the strategy to ensure that it's executed perfectly? Which stocks to enter, when to enter them, what should be the quantity, what will be your stop loss, when will you exit the trade? You must have all of this crystal clear before you even think of placing a trade. Okay, because if you have rules, then you will have results. No rules, no results. Simple as that. And if you do not have answers to the above, please do not enter the market. I'm saving you money. Okay, I'm not being harsh with you. I'm just saving your money. Okay, trust me, been there, done that. Listen to all the experts on CNBC, paid for their tips. I don't want to name names, but 36,000 for 6 months in 2007. I've done all of that. Nothing works. You won't get the conviction. No place in the market again for gut feelings. Tips and calls strongly. Doesn't matter who. Even if I get a call from or a tip from Rakesh Jhunjhunwala, I will still do my own research and see if it matches with that. If it doesn't match, I will not enter it. Because he may have a different criteria for entering. He may have a different stop loss. He definitely has bigger capital. Okay, I don't know how much percentage of his capital he's deploying into that trade. And he himself, the credit of the guy, he always says, please do not follow my tips. Okay, or please do not follow my trades. Don't copy my trades. Because मैं तो कभी निकल जाऊंगा. I may be there for donkey's years. I am doing, trading. I have trading profits as well. Rakesh Jhunjhunwala is a big trader. People think he's only an investor. He started as a trader, made a lot of money, invested that money, and he's a big investor, of course. But even today, I think his firm generates some 450 crores in trading profits every year. And that trading money he funnels into investments. So he is investing with the market's money, not with his own money. Okay, of course, he's a genius, the fellow. So, but don't do that. News, TV channel based entry, news based, stock giving you, most of the time the news is priced into the stock. Okay, and you have to enter before the news hits the market. Most people don't know that because news is available to the world. You can't make money on something which the information is available to the world. You have to preempt all of this, and the way to do that is through technical analysis. Okay, don't look at TV channel, the experts giving you entries and all of that. Very rarely will you make money because you will not have the conviction. Been there, done that. So I'm telling you. Okay, avoid false expectations and notions. Stock market means gambling. Okay, how many people honestly think this to be the case? Be honest, and you can say yes, I do think it is gambling to whatever extent. Yes. Okay, Zerodha, appreciate your honesty. Yeah, Yash, without knowledge. Absolutely. Yes, that's a perfect point. Okay, somebody else said, okay, Dibendu also. Yes, sorry. No, there's nothing to be sorry about. That's just an opinion to have. You can always change your opinions based on new information. That's fine. Being able to, I'll prove this in the next slide why it is not gambling. Being able to make a fixed amount every month like a salary, very difficult in the markets unless you get to that level. One cannot time the market. Now, when people say one cannot time the market, it means they cannot time the market. Okay, I've been timing the market at my own small level for the last 4 years. Okay, so when people say you cannot time the market, it means they are expressing their inability, or that not inability also, that they don't believe that they can time the market. Beliefs can be different for different people. Okay, I mean, I make a living out of timing the market, and all traders do. I'm not the only one. One needs to be in front of the screen the entire day. This is false, completely wrong. Okay, an intraday trader may also require only 1 hour of screen time. not more than that. Okay, people are not even aware of that. But so you don't need to be in front of the screen all the time, not needed. Okay, yeah, once you become full-time, if you want to, you can, but not needed. Okay, I need a huge amount to start with. Another fallacy, you can start with 1 lakh also, doesn't matter. You won't make a huge amount because everything is a function of your capital, but you can start with a smaller amount, no problems. Most people lose money, so I will too. Most people don't know what they're doing. So if you don't know what you're doing, you will also lose money. But if you know what you're doing, you are not most people. All right, so that's where the difference lies. Stocks which are below rupees 100 are cheaper than stocks which are at 30,000 rupees. Again, classic retail mistake. This is just the stock price. It has got nothing to do with the value of the stock. The 30,000 rupee price stock may be undervalued, whereas the 100 rupee stock may be overvalued. Okay, I can't go into detail in this, but trust me, there's a huge difference. So this is just a lower priced stock. The price is lower, but the value may be completely different. Okay, one should buy stocks which have fallen. So people always say, I have only 5,000 rupees. I have only, let's say, 50,000 rupees. Okay, then I can buy so many more of 100 rupees stocks. It doesn't matter. You can buy 2 of this and be at 60,000, or you can buy 600 of this and be at 60,000. It doesn't matter. At the end of the day, both stocks have an equal chance of moving percentage wise. Okay, everything is in percentage terms. One should buy stocks which have fallen a lot and do bottom fishing. Completely wrong. Okay, never do this. If something is fallen, it is fallen for a reason. Okay, don't try and catch a falling knife. Okay, especially there are ways to do that if you are a professional trader and if you know what you're doing. So I do post in my levels also. You would have seen certain times where the price is higher, but I say, okay, I will buy it at this level. But that has a reasoning behind it, and there is still a stop loss. Okay, so it is not I buy it and just let it go forever. No. Okay, high risk is equal to high return. Okay, this is also a fallacy. High risk does not have to be high return. In fact, low risk and high return is what you should aim for. Okay, if it is high risk, high return, then again, you're taking equivalent risk or equivalent return. You need to take the odds need to be in your favor. So you need to lower this part and keep this higher. So lower risk and higher return is what you should aim for. I should try my luck in the stock markets. Luck has no place again in the markets. Okay, I need very good tips from people. Well, the only way to get tips from people is to become a waiter. All right. I mean, don't rely on tips, from tips calls, whatever, even for people who are supposedly in the industry, because it doesn't work. Most people will never tell you when to exit, and and it's difficult to manage also. I don't know, like I put levels. There's a reason why I don't put a stop loss and exit levels, because that varies from person to person, psychology to psychology. And I will be bombarded with people who are saying, sir, I'm stuck, what do I do, this, that. So these are levels. If it makes sense to you, trade, otherwise ignore it. Stop loss hunting. Okay, this is another notion that people have, that markets, my stop loss is always taken out. There are always professionals hunting for your stop loss. I think I thought I had muted everyone. New people. Sorry about that. Yeah. I think there's some new people who joined in. So yeah, so question and answer session will be there, Divendu, after the webinar. Okay, so there is no such thing as stop loss hunting. Okay, markets are rigged by institutions. Another policy. Okay, I'm trading, I'm profitable. Okay, there is nobody out there hunting for my stop loss or trying to rig so that I don't make money. This is just from a lack of knowledge. Okay, FIIs, institutions never make losses. Again, a misnomer. Okay, they do make losses. Everybody who is in the market makes losses, but they keep their losses small and manageable. Okay, and at the end of a certain period, they are always net profitable. That's what is the aim. The aim is never to avoid losses. You cannot avoid losses. It's like breathing. Can you live without, air has to go in and air has to go out. You breathe in and you breathe out. Can you say I will only breathe in? No, you have to breathe out as well, and that's just part of it. 80% hit ratio, holy grail hunting. There is no holy grail. The secret is there is no secret. Okay, there is no holy grail. You just have to find a strategy with an edge. Of course, if I say if there is a holy grail, find a strategy with an edge. Okay, trade it relentlessly with great risk management, money management, and with fantastic psychology. That is the holy grail. Okay, and it is easier than you think. Okay, but because it is simple and easy, most people don't want to do it. Okay, is the stock market gambling? Emphatic answer is no, and here's why. Okay, in gambling, betting, okay, mathematical odds are always against you. This is proven by the fact that casinos don't go bust, players do. Okay, so casinos, if the odds are always with the casinos, not with the player. While one single player may win occasionally over the course of hundreds of bets, which is what the casino is doing, they are okay giving some freebies once in a while. Over hundreds of bets, the casino will always win because the odds are in their favor. When you bet, say in sports, okay, on the favorite, it's not allowed in India, but if you know how betting works, you'll typically win 30 paisa for every 1 rupee that you bet on the favorite, okay, which means that even if the result goes in your favor, you will earn only 30%, 0.3 R. So you risked 1 rupee, so you made 30 paise, so that's 0.3 R, okay. Whereas if it goes against you, you will lose 100%, okay. The RR here, risk reward ratio, is skewed against you. You make only 30%, but you lose 100%. So if you win 4 times, you make some net return and you account for one more loss going against you. Okay, that's too difficult. In the stock market, you can actually bet on the favorite, which is a high probability setup. Okay, high probability trading setup. And if you're right, you can get 4R or more. And if you're wrong, you still lose only 1R. Okay, so here where you will earn 0.3R, here you are getting 4R. That is the difference between the stock market and gambling. Gambling, the odds are always against you. In the stock market, you can create the odds in your favor and you can choose to only go for the high probability setups. And the chances of being right in both betting and the stock market are the same, 50-50 at the start of the bet. But the RR is the massive differentiator. This is the most important point. So the only way you can win consistently in gambling is when you bet when the odds of success are higher by, say, card counting. So you can actually card counts to know कि कितने cards बचे हैं and what is the likelihood and which cards are more likely left in the in the dealer's hand. This is the way you break the house's edge and turn the odds around in your favor. In fact, you can watch a Hollywood movie called 21. Okay, it's got Kevin Spacey and is actually inspired by the true story of the MIT, Massachusetts Institute of Technology blackjack team. Okay, so the professor, this guy was a professor over there. He created a blackjack team. He was a brilliant guy. He got the others. Obviously, anybody gets into MIT is brilliant themselves. Okay, he created a team of blackjack professionals. Okay, where they actually made millions by doing this card counting. But this is illegal. Okay, and casinos will actually bar you if you do that. Why? Because then they will lose money all the time. So in the markets, there is nobody stopping you from creating a system with an edge and relentlessly executing it. That's the biggest advantage. In the markets, you can create your own edge. Okay, that's what we're talking about. Okay, think big. The biggest reason that people don't make money in the markets is that they simply don't take it seriously enough because they don't know how big the opportunity is. So if you think that the market is a casino, obviously you will think, boss, मेरे को थोड़ी better बनना है. I will not look at the market seriously. But if you really knew the potential, you would do all that it takes to become successful. And examples of thinking small are actually not understanding the concept of risk reward. Okay, this is a question I get very often. Which course should I do? As if you should do only one course. My answer to this is whichever trader you think or trainer you think is believable enough, genuine enough, do his course. Doesn't matter what he's teaching. As long as he's teaching you something about the markets, do his course. Simple as that. And do tens of courses. Nobody's stopping you. Because you may not strike gold with the first trainer. Maybe his concept, his strategy is not for you. I don't know your psychology, So maybe it's not for you. But what if it is for you? And maybe the third course you do, it'll really click, or the fifth course you do. I don't know, So you have to be at it. Focusing on recovery of course fee. This is a question I get. Sir, when can I recover my course fees? If you are doing the course to recover course fees, please do not do the course. When I do a course, my objective is to become a massively profitable trader. Okay. Course fees is just a part of that, right? It can't be your whole end all. I mean, are you doing something just to recover it and then that's it? Then net you're still zero. You're better off not doing the course only, Objective has to be much bigger because I'm here to make an X percentage. I'm here to generate 25%, 30% per annum, over and above what I'm getting from mutual funds. and overestimating their ability to make money in the short term and grossly underestimating their ability to make money in the long term. Okay, this is because again, most people don't understand compounding. Okay, so not knowing about success stories. So a lot of people are not aware of these things. Some of you maybe, I don't know. There's a professor in Bombay, okay, who's worth 1,000 crores in his lifetime, okay, who still teaches, and he's achieved all of this through investing in the markets. Okay, there are countless other examples. How many people are you? How many people are aware of this? You know that there is a professor like this. Is anyone aware? Oh,
No.
great. Dipendu is aware. Fantastic. Okay, but most people would not have heard of. Yeah, I mean, it was shocking for me as well when I heard it several years ago. That time it was not 1,000 crores, 600 crores, but now it is. Jim Simmons of the Medallion Fund. This guy, Medallion Fund, is the highest performing hedge fund in history. Okay, 66% return per annum since inception in 1988. They charge 5% management fees and 44% performance fees, where the industry average is 220, 2% management fee, 20% performance fee. I mean, obviously, when you can return this much, okay, the fund is closed now. It's been closed since 10 years. So if you want to get into the fund, you can't. Okay. George Soros, he made 1 billion pounds, that is roughly 10,000 crores in a single trade, shorting the GBP, the British pound. Okay, and this was 20-year-old story, by the way. Not understanding the power of compounding. You can go from 10 lakhs to 100 crores in 30 years if you just did 23% CAGR per annum. Most people would find this shocking, but it's actually true. You can do it on any compounding calculator. Not realizing the edge retail has over institutions. Now you think, what edge does retail have over institutions? We can get in and out of small stocks as well. Okay, we don't have that big a capital. So for us to make 40-50% return per annum is significantly easier on a small capital. And small, I'm saying even up to 20, 30, 50 crores also you can make that money. Okay, Warren Buffett, in fact, he says, my biggest problem is my capital is too big. I can't make it. But in my younger years, when he says making 40-50% is a piece of cake because my capital is small, you know, but in big capital, you can't do it. You don't have those opportunities, you know. There is a limitation, you know, size has its limitation. So these are, you know, huge, you know, how many people feel that these points alone are, you know, worth exploring? You know, how many people, you know, feel that these points themselves are, you know, worth thinking about the markets, you know, and are quite interesting. Just put I in the comment box. I. Okay, good. Lots of eyes coming in. Fabulous. Okay, so understand that trading is a business. Okay, now success in the markets is not accidental. It's a result of approaching it like you would any other professional endeavor. So like a business, there will be small losses, but you don't shut the business because of it. Okay, businesses also make losses, right? Somebody sometimes doesn't pay, or, you know, employees steal something, you know, you lose something, breakage, you know, products go bad. That's just part of it. Businesses have overheads such as salaries, rent, electricity, etc. Stop loss is the overhead in this business, and the only one. Okay, so there's no salary to pay, no rent to pay, yeah, electricity, barely. Okay, but that's it. That's the only cost of this business. Stop loss. A business needs managerial ability. Trading also needs skill and knowledge. Business is about net profits at the end of a particular period, with small profits, with small periods of manageable losses in between. Ditto with trading. How many people know, right? Tata Steel. Steel is a cyclical business. So when the cycle is down, for years you make losses. But when the cycle is up, for years you make profits. At the end of Tata Steel has been there for probably what, 50, 60, 100 years? I don't know. Okay. So it survived, right? So in spite of being loss making on for several years in a row, and several times in this period, it is still existing, right? Because it is making net profit. Their way of looking at it is, I want to be net profitable at the end of every 10-year period. Okay, because in a cyclical business, you can't look at net profits. If he says, you know, every month I have to be profitable, he'll have to shut his business or look at some other business. For a business to keep growing, the businessman needs to constantly upgrade himself through coaching, attending expo seminar, etc. Trading is also no different. Business can keep growing year on year for decades, and so is the case with trading. Business can be passed on. When I say trading, I mean investing also. Yeah. So yeah, the terms are interchangeable because it's the same thing. business can be passed down to generations. Trading knowledge can also be passed down so that each generation does not keep making the same mistakes. Unfortunately, almost everybody, I mean, you can be guaranteed that even if you are not in the markets, maybe your children maybe get into the markets, they may make losses. Your grandchildren may. Kahan na kahan to, that bug will always be there. Okay. And so wouldn't it be great to actually hand down this knowledge so that future generations are actually protected? That's why the rich keep getting richer, right? Because this knowledge of business keeps flowing from generation to generation. Trade discretionary and non-discretionary, which is system trading strategies. Now, this is an eventual goal, okay? So it'll happen in future, not to be concerned with right now. Initially, you will start with one strategy and then move on to trading a combination. Now, discretionary strategies are strategies where you use your discretion or judgment to enter trades. Non-discretionary strategies are strategies where there is no room for discretion. So you have already created a hypothesis or a strategy, backtested it on past data, and based on the results, are now running the strategy in live markets. Okay, so that's what a non-discretionary strategy is. So I trade one non-discretionary strategy in Bank Nifty, where the rules are already crystal clear, and I just have to relentlessly execute it. So my knowledge was in creating the strategy, and now it is just executing and modifying it from time to time. That's it. And this is done for diversification and reducing the risk as well as the extent of drawdown. So one strategy will be profitable when the other one is loss making, and so on and so forth. So overall, your equity curve does not fluctuate much. Grow as a person. Okay, now, so this is your success in any field will only be a reflection of you as a person. And this is a bitter pill for most people to swallow, but that's the cold hard truth. Okay, so whatever, we are our own limiting factors, right? In any profession, business, trading, job, doesn't matter. It's all a reflection of where we are as people. We can have, and we can only have as much money as we are capable of handling. And this capability has to be developed, just like any other skill. How do I know this? Statistics show that 70% of lottery winners end up broke, and 33% end up going bankrupt. Why? Because they don't know, they can't handle money. Psychologically, it's a windfall. Their limit is at whatever, let's say 10 lakhs, and if they won a 10 crore lottery, their inner voice, their little voice will say, "Okay, Arey boss, I'm not able to handle this. I'm not capable of 10 lakhs. Anything beyond 10 lakhs." So he will get back to his whatever his psychology can handle, and then he'll be happy. So unfortunately, that's how it is. So we have to. The universe can only give us as much money as we are capable of handling. Okay, and I've seen this personally with myself. I mean, several years back, if somebody had asked me, would you ever trade for anybody else? My answer would have been no. Okay. But in 2019, I actually started trading for other people and traded very profitably as well. And now I've stopped taking new money on. But yeah, there are some investors, close friends and family for whom I trade. And my psychology can handle it now. Earlier, though, because I was not profitable myself, I was like, boss, dusre ka paisa leke to, who's going to take so much tension? But now I can handle it. My psychology. So I have grown as a person. As my psychology has grown, I have also grown. So work on your psychology, handling the ups and downs of the market with ease. Relationship, equation, and comfort with money. Okay, unfortunately, money is not taught in India. It's always a very taboo subject as well. Nobody, even people may be very successful in their business or forget business, but in their job, but they don't really know how to handle money. Okay, and we are not taught this in school, or by anybody else. So everybody makes the same mistakes. Patience levels, very important. Work on your patience. I always say that the market is one place where people come, looking for a quick buck, but that quick buck only comes once they've learned patience. So that's like an oxymoron. Humility. Okay. If you don't work on your humility, the market will work on it for sure. So the markets, have a way of humbling you, and not in any bad way. Okay. It really, so like when you reach that stage where, profits, losses have lesser impact on you. I wouldn't say they have zero impact on you, but significantly less impact. And you are grateful and humble in your profits as well. Okay, you're not shouting from the rooftops. Why? Because boss, there will be a time where I will lose some money also. So okay, let's keep it, nice and honest. And that translates to other places of your life as well, which is amazing. So finally, do whatever it takes. Okay, pay the price that must be paid for success. Do whatever it takes and give it a go. Okay, why give it a go and give it a good go? Because if it works out, the rewards are surely worth it. I can attest to that. I can tell you that it's a fantastic stage to be in. All right, and it's a fantastic place to be in. Give it a chance. Who knows? I mean, you could be the next one. All right. And this price that you may have to pay, maybe in terms of time or money, or as in my case, it was both. So I not only lost a lot of time, actually cracking the code, but I also lost a lot of money. Now money you can gain back, but time we all have limited, right? So I would place this to be much of significance. And I see that I know some of the people on this webinar, are very young. I mean, you guys really have this on your side. And billionaire and pauper also has so there's lots of billionaires who love to trade almost half of their money for maybe 20 years more. Not possible, but so if you can avoid this wastage of time, that's what I would wish and hope for you, because then you can do all of these things, become financially wealthy, reach whatever financial goals. And one thing I can tell you is stock market, the amount of money you can make is limitless. I mean, unless you're already worth 100, 200 crores, that's a separate story. But even there, this could be a good passive way of making, your 100, 200 crores, earn substantially higher return. Yeah, so that's it, guys. This is actually what the webinar was all about. I'm going to share with you. One second, let me see if I can open this. So this is my one of my clients' accounts. Okay, I'm just going to share this with you very quickly, just so that you have a sense of the possibilities. We'll get to Q&A in a bit. We'll get to Q&A also in a bit. So this is my best friend's account, which I've been trading for the last 1 odd year. He started with 30 lakhs and he put in some more money, and today I think he's at 60 odd lakhs. So these are some of the stocks in his account. Okay, ATGL up 295%, Balaji M's up 130%, 80%, 78%, 67%. I've ranked them 59, 52, 48, 47, 41, 40, 37, 32, 26. So total holdings are what, 32, out of which few are liquidities and all, so might be 30 in all. 47, 41, 37, 26, 24, 23. So everything profitable except two stocks which are minus 1.2 and minus this. Gold bees is, this is more of a an auspicious thing which I buy on Dhanteras for my clients and myself. So these are the only two. Why? Because they were bought recently. Okay, so these three are still not yet in the demat account, so they were bought on Friday. So overall 37% up. Why I'm showing you this is not for anything else. It's just to tell you that what all is possible. There's fantastic things that are possible if you know what to do. And that's most important. How many feel that this was that this whatever I shared made sense to you? How many people feel that? You can just quickly type yes or whatever. Okay, all right, fabulous. All right, great. No, okay, so Yash says, sir, but index almost doubled in last 1 year. So these are just open positions. So this is not the profits that we have actually made in the last 1 year, because I also trade bank Nifty. All right, so we've made substantially higher than this. So that's a good point. But please remember, the index doubling is also a misnomer. So the index may double, that's fine. But again, we are looking at it from a 4 or 5 year perspective, because there will be times when the index does nothing also. Okay, and if the index does nothing, okay, we will still end up making money in that period, and that is what is important. Okay, that we make money in all markets. Okay, index can be whatever, but we have to make money every year. That should be our goal. Okay, so there have been periods where, so like in February, March, the index was down 50%, right? But my investors account, the first one that I started, So we started with 30 lakhs, and by the end of March, which is exactly 1 year and 1 month from that period, we had gone up to 26 lakhs. So even though the market was down 50%, we were up 80%. So that's how it works. And again, my results don't keep me as the benchmark. You may do much better. Who knows? So that's what it is. All right, guys. So we do have a course as well that we that we try to help people out with. Is it okay if I can take you through that for the next 10 minutes, and then we go to the Q&A section? Do I have your agreement to actually go ahead with just quickly telling you what the course is all about? Yeah, in case some of you would be interested. All right, great. Thank you so much for that. Let me see. I'm over here. All right, so the course that I conduct is called the Power of Breakouts, because that is my style of trading. It's breakout trading. And you already know enough about me, so we'll skip that section. Those are my certificates. And again, this is something that we have, we already covered. But sure, quickly I'll go through it. So what I did right, actually started learning from other people, a lot of backtesting, stuck to the style that worked for me. Okay, made constant efforts to reduce and manage risk and stop chasing only returns, and keep risk fixed and small and reward variable and unlimited. Follow the trend, stop searching for the holy grail. All of this I've already covered. And what I did wrong, so I jumped into trading with no knowledge. I relied on TV and other experts for trading calls, was undercapitalized to even start trading, and did not do courses for a long time, thinking that they were expensive. Okay, and of course I lost significantly more in losses as well as the time lost in reinventing the wheel. Okay, and our concept, so it's a timeless and eternal concept. It works on all instruments, whether it's stocks, commodities, forex, crypto. Okay, you name it, it works on everything. It works on all time frames: swing, positional, investment, even intraday. Okay, has worked since markets began and likely to work till markets exist. I've backtested this on even US markets of the 20s and 30s. Not backtested it, but I have seen it whether it would have worked on those charts, and it has. Okay, why enroll? Now you enter only the strongest stocks. So there is a lot of criteria that we use, or that I use, whereby we enter only the strongest stocks which have the highest potential. You know beforehand where to enter and where to exit. All the rules are crystal clear and defined. Okay, and if you like to learn a systematic way of analyzing stocks on your own. Okay. So there is no room for asking anybody anything. In fact, I don't watch CNBC, I don't watch SGX Nifty, doesn't matter to me. Okay, the only time I check SGX Nifty is if somebody messages, oh, SGX Nifty is down by a huge amount or whatever. Otherwise, I don't even bother. Okay, and I will also check it only at 5 minutes before 9 o'clock on the trading day itself, because I mean at night time, what can you do about it? Okay, it doesn't matter. If a stock is going down continuously, your entry will not be triggered, so you don't end up catching falling knives. And there is one strategy in the course that I teach where we do try to catch falling knives, but those are not knives as such, because we know that the market is likely to turn around from those levels. So that's where we look to enter. Who can attend? Anyone and everyone interested in the markets. So you could be an active trader with a lot of time availability, or you could be a passive trader with limited time availability. Anyone who would like to be a successful and profitable trader, it doesn't matter what your knowledge level is. You could be it's designed for absolute beginners. Okay, so I assume, because everybody comes in with different knowledge, a lot of the knowledge is also more harmful than useful. So I take you from zero. I assume that you are zero, and I strongly suggest that even if you have existing knowledge, try and wipe that out. Okay, and look at everything afresh, because that's how because I know this works. I don't know whether what you know works or not. So it's for anybody. And as far as time availability is concerned, so if you can devote time, you don't need to look at the markets on an intraday basis. Okay, you just need to be able to place the orders. Even those can be taken care of by GTT orders, where you place the orders after market hours. So you need either 1 hour analysis time at the end of every after the end of every market session, after 3:30 and before 9 a.m. 1 hour you need every day. Or if you don't have that also, then you need a couple of hours, which is 2 hours over the weekend. So Friday after 3:30 till Monday morning 9 a.m. in between this, if you can come up with 2 hours, okay, so either or, both preferable, but either or. So there are different investing styles and trading styles where either 1 hour a day or 2 hours over the weekend, both will work. If you don't have that also, then of course it's difficult. You can do slightly longer, where 2 hours a month, but then you will have very few opportunities, and you can, of course, it does not have to be continuous, so you can always take a break whenever you want. That's completely fine. What will you learn? Trade rationale, why to enter. Okay, so whenever we enter, we need to know the why. Okay, without the why, there is no entry. When to enter, because you need to know ye karne kya wala hai, what is the stock going to do. Okay, if you don't know that, then it's a tukka, okay, as we call it. When to enter, timing. Okay, timing is most important, so you should be, and we do time the market because that's how you make the maximum returns. We avoid phases where stock is doing nothing, and we only enter when the stock is likely to give a big move. Okay, what is likely? That's what the secret sauce is. Which stocks to enter? The ones with the highest potential. How much to buy? So we teach you money management. Okay, what should be my stop loss, and several other things which are all covered in risk management. When to exit? Several methods of exit, but of course it is all designed for profits. All right, and every exit is for a person. Yeah, and this applies to intraday as well. Correct. Pros and cons of entry and exit methods, because it's tailored to your psychology. I can't, I wait for big profits, as you saw in Adani Total Gas, 300% profits. So I will stick to that. I'm okay with sticking to that. A lot of people psychologically can't handle it, so they might exit early. That's fine. Ensure minimal losses, survivability in the long run. Okay, practice in real time. So we give you access to premium charts where I draw the charts and I share it with you of trades which are likely to work well. Okay, for 2 months. That's complimentary. And this is the course. So the duration is 45 hours over 2 months. All right. It's best suited for traders and investors looking for a simple step-by-step approach. Okay, because that is what this is. It's broken down. There are crystal clear rules for everything. Okay. There is some subjectivity as far as doing certain things is concerned, but you will get better at it. I mean, you can't completely objectivize the whole thing. Okay, because that's not how it works. But I've taken care to ensure that it is as objective as possible. Okay, people who do not believe in reinventing the wheel. All right, I've already done all this reinvention. I'm saving you significant amount of time. Okay, and busy professionals who want to create a second source of income part time. So you can start. I always say trading and investing. You can start part time. And the reason why, I mean, this is what got me into the markets. I was like, look, I was in a job at that time. Okay. And I was like, I'm working hard. Okay. And this fixed deposit concept never attracted me. I was like, for the entire year, okay, you make, at that time, I think it was 10% or 11%. I did not find even that attractive. I was like, पूरे साल के बाद 11% मिलता है. ऊपर से tax लगता है उसमें. So net you're left with 8%. Today you're left with even less, 4.5% or something. Okay, I said that's not good enough. If I'm working hard, my money should work harder actually, than me. And that was the reason for me getting into the markets. So some of you may be sitting on, with good salaries and all. Make your money work hard. How good would it be if you replace your salary and then think of becoming full time in this? I don't know. That's up to you. Prerequisites, none. Anyone can join at any level of knowledge. The course is designed such. It's got 30 hours of content, okay, spread across 14 webinars over 2 months. This is all pre-recorded, okay. And to complement this, we also have 15 hours of live Q&A mentoring where I will be there, okay, via 7 webinars held on weekends, so that everybody's availability is confirmed, okay. It's provided in the form of videos and there are PDFs as well, okay. So presentations like this one, okay, with charts, everything. And these are all explained, the concepts are all explained with real life examples from my own trading. All right. So I will show you in real time all of these. So you saw in Mudit's account, my friend's account, all those charts, right? I will show you all those, results, right? So I will show you in real time, okay, how that was done. And these are just, these stocks will only be there for 2-3 months. Okay. You're constantly entering new stocks and exiting old ones. So that profitability doesn't show the profits which we have already exited with. These are just open positions. Okay. And you are always churning, right? So in 1 year, you don't buy something. So typically the holding period is from a few days to a few months maximum. Okay. Not beyond that. because we churn to generate more returns. We move on to the next big idea. Okay, we don't buy and hold forever. Proprietary trading strategies for short-term swing trading and long-term as well investment. So I will teach you how you can make long-term investments by looking at stock charts, all right, and by analyzing charts. You don't need any research report from any broker, nothing of that sort. You can read it if you want it. Okay, I don't do it. So a lot of times I'm not even aware of what the company does. I don't do long-term investments majorly. I'm more interested in short-term swing because I can make more money here. Okay, this is a passive form of investing. I'm more interested in active forms, but you can do either or. That's totally your choice. That's why there is no one size fits all approach. Okay. So I also have some very unique risk management strategies which I've developed for myself, which I've seen they work brilliantly, and that's what I will share with you as well. Recordings of all the above sessions are provided for 6 months through our learning management platform. Okay. You also get 2 months of WhatsApp group support. This is one of the, although this comes last here in the description, I cannot stress the importance of this enough. So you will be putting all your queries and all, apart from the live Q&A and mentoring, on a daily basis. Whenever you feel you have a query or you will put in some chart, I will give you answers to that and hand holding. So this is like your, although it's a group, this is your you could say direct access to me. Okay. And really massive learning takes place in these groups. People who have joined my course, they can vouch for that. The pricing is normally 65,000, but till the 23rd of this month, it is 55,000. So there's a 15% discount. Plus, you get some bonuses. You get 2 months of the complimentary premium chart subscription. So where I share charts, for high potential opportunities, and typically it's about you could say roughly about 20 charts or so, 10 to 20 charts per month. Actually, it's more than that right now, but then the markets are such. All right. But then 10 to 20, I think, is what you can hope to expect on a monthly basis. You also get one free call with me for 30 minutes. This is complimentary. Normally, this is a paid service, but we've kept it for our students. You also get a trading account opening, help facility in case you don't have a trading account. And I strongly recommend Zerodha, so we can help you open the account over there. If you open the account through us, then obviously you will get more support. What is the post content? Candlesticks. Okay, the most effective candlestick pattern. Now there are hundreds. Okay, lots and lots of candlestick patterns. I think 40, 50 plus. But I only focus on the ones that I find most effective, and when and how to use them. Okay, so everybody has a different way of. Every trader has a different way of using things, right? So you can have the same course content taught by 10 traders, and all 10 course contents will be completely different. Okay, because that's their experience. And all of them could be right. All right. So that's what I'm saying. And candlesticks are a precursor to upcoming moves. So in the next 2 to 3 days, what is likely to happen? Candlesticks give you the short-term information on that. Trends, most important, how to interpret trends and spot them easily with very simple tools. Okay. So I have there are different ways of understanding the trend correctly. So I will take you through all of those. So you can either of them, one of them could work. But I have just shown multiple ways so that it's very easy and you understand the psychology. Most important, in the markets, bookish knowledge does not work. It has to be practical and applicable. Okay, so that's what we will do. Elliott wave. Elliott wave is actually very complicated. It's there are people who study Elliott wave for years and still don't understand. Okay, it's extremely subjective. All right, but I have simplified it for my practical use. Rather than theory, because I mean, there are people who spend years, counting the waves, and they still don't get it right. I have simplified it to a form where I feel comfortable, and it works. So I will show you only that aspect that works, and it helps to identify likely turning points. Multiple time frame analysis. You would have heard this phrase being thrown around. So I will tell you how to analyze multiple time frames so that you get a holistic picture of the stock. It's like a top-down bird's eye view of what the stock is going to do. It helps to identify important levels of the stock, so that you should know at what stage the stock is. Is it in a correction phase? Is it in a consolidation phase? Is it likely to move and turn around from here? So that's most important. But otherwise, then it's just guessing, right? So there has to be, you have to look at everything and it needs to make sense. Fibonacci, so this is a Italian mathematician. Okay, his principles apply to the entire world. Like I keep saying, anything that applies to the world applies to the stock market as well. Okay, and this will also help you to know where a falling stock is likely to reverse from. All right, but on its own it cannot be used. It has to be used in conjunction with other things. Okay, technical indicators. Now actually what I teach is, okay, how you can trade without any indicators. This is actually price action trading is what I teach, but I still teach indicators because it does help to simplify trading. And if you're doing a course, you should know what indicators are. You may use them, not use them, that's your discretion. Okay, I personally am not a big fan of indicators because ultimately every indicator is derived from price. So why not look at price itself, rather than trying to look at indicators. And indicators always lag. So trend lines and chart patterns, you learn how to draw trend lines in a simple and effective manner, as well as very unconventional usage of the same, and learn which chart patterns work and when they are most likely to work. It's most important to know what you're doing and when you should be using certain things, and when you should be ignoring certain things. Breakouts, like I said, I'm a breakout trader, so I will teach you all the types of breakouts that I trade and which ones to avoid. And the real skill of a trader lies here. So there are a lot of breakout traders, but what is important is how and when to take a breakout, which breakouts to trade, which breakouts to avoid. That's most important. Trading strategy. So you learn one swing trading strategy for short term, which I personally use, and one investment strategy for long term investment. Okay, and you only need one strategy to become a success. Okay, I know of traders who make tens of lakhs a month and they only trade one strategy. That's it. Okay, and this is all, of course, combining to as a part of price action. So you learn how to combine everything that you have learned and apply it, and when to apply what. Okay, you will understand all of that. And if you understand price action, you will never be surprised by any price movements, even if they are against you. Okay, so even if something goes against you and hits a stop loss, you will not be surprised by it, because there will be you will know the reason why this happened. Okay, and that is most important to get that confidence. Okay, the course is going to start on the 1st of July. It's a 2 months online course. The detailed schedule is basically you will have one session. You'll have some videos that I will unlock for you, which you have to go through in the entire week at your convenience. And then we will have a live Q&A on Sunday from 11 to 1. Okay, where these videos, there'll be questions and answers on the videos that you have already gone through, only on these videos. Okay, we will follow this process for the next 7-8 weeks. Okay, and where you have all these sessions, and then you have some individual sessions also after all of this, and you have this with the WhatsApp group. So it's a WhatsApp group as well, which gives you the the accelerated learning, because that's on a daily basis, right? That's on any time. If you see a chart which you feel you have a query on, you can immediately ask me on the WhatsApp. Okay, premium charts, this is another product we have. It's a 1-year subscription. Again, like I said, high probability breakout chart setups are shared by me, and typically you get 10 to 20 such stocks. Refined ideas. This is 12,000 for 12 months. And you have an advisory call. This is for people who want some mentoring, who are stuck somewhere. This is 3,000 per hour. That's not our focus. You already, okay, what our products are not. Okay, it's not a get rich quick scheme. It's not a shortcut to any profit. It's not a stock market tip, nothing of that. It's pure learning. Okay, it will help you to become a profitable trader if you stick at it. Okay, but I'm not going to promise you that I'm not here to, I mean, I don't need to sell any service so desperately. I believe in being completely transparent about what I'm offering. So it's not as if you will become a trader after doing the course immediately. Some of you may. Okay, so like there have been, I'm going to share some testimonials right now where some traders, students who did the course, they have recovered more than 10 times their investment. Okay, in a matter of, the course is not yet over. The course will get over next week, and most of them have started trading. Okay, they at least have confidence enough, and a lot of them are profitable. And so that depends. I don't know how much time you're going to put in. I don't know how much commitment you will have. But what I can tell you is, what I will teach you, you will for sure agree. Even if you're an absolute beginner right now, I don't know what this is. you will for sure agree at the end of the course, boss, this makes sense. Okay. And this cannot not work. Okay. Then it's just a matter of doing this process enough times so that you are able to generate the results on a consistent basis. Consistency is the key. Yeah. So I'm quickly going to take you to the, I'll just quickly show you this testimonial. It's a 5 or a 6 minute video, and then we will have the Q&A session. Yeah, I'm sure a lot of people would have queries.
Top three is the understanding of the charts in a very simplified manner. Then understanding which stocks to trade. Then definitely trading with a system. That would be the second one. And following the system to the core.
Top 3 benefits is number 1, no psychological tension. Second, profits. Okay, so I keep the profits at second because for me the psychological piece is more important. The best thing about the course is Jay himself. He does not take any question as a stupid question. His famous line is that the stupid questions are those questions which are not asked. I calculate in monetary terms, the value addition would be like I think 10 times already I've got.
Top 3 benefits. Sessions were available, like recordings. That was great. The WhatsApp group is really helpful, and premium chat analysis. The best thing was Jai is always patient enough to listen to all the queries, even if we ask really dumb questions, but he listens to it and provide the information in a way that we can understand.
One is confidence to actually get into stock trading. Two is the knowledge gained in terms of what are the tools that is required to do the trading, and 3, the confidence that in case I go wrong somewhere, there will be a support available.
To be associated with Jai, that's one thing. Second thing, give a different insight on how to look at stocks. The best thing is to take trades just based on price action and even without use of a single indicator.
I understand the technicals better, understand how trend lines work, understand what kind of patterns to look for, what kind of candles to look for, rather than blindly looking at the price movement of any particular stock.
I've learned some technical stuff about trading.
First attraction towards this was the content was around the risk and money management. So I really had to brush up my skills around that and get my basics corrected.
One is since he's been there in this field for nearly 20 years, or 20 years plus. I mean, he has seen the ups and downs, and that whatever he has learned in 20 years, he has been able to put it in a module for 2 weeks, and that entire knowledge that he had is being transferred to us. So I can say that I feel quite lucky because all the hard work was done by him, and we are kind of sitting and enjoying the benefits of that.
He's very patient. He's exceedingly patient and very lucid while teaching.
He's a good person also, and it's not just that he's a good trader. So those will be my last words.
He's exceptional as a trainer, and he's he's articulate. He's able to explain it in minute detail. He's very patient, and and you can always approach him. He's an extremely friendly person, approachable. So that's what makes him a very unique person, specifically when it comes to trading.
Not anything specific, because this is my first experience and it's been really great so far.
So I said, very calm. I would honestly say very calm, very very focused. I mean, a lot of back testing, etc.
The course coordinator, Jay. He's absolutely he's a maverick at his craft, and he knows his stuff very well.
I think Jay has great content, a very mature person, and he's got the content and he knows how to package it to and offer it to his students. I think that's so people have I've seen a lot of people have great content, but when they actually communicate it back, I think it goes all over and confuses more. But I think Jay is pretty focused. He knows what he wants to tell his students. He knows what messages. He stresses on what points he feels somebody needs to take care of.
It was my first course where I paid something from my pocket. Yes, definitely, 200%, 200%. मतलब not a doubt. मतलब frankly, मतलब ऐसा नहीं है कि मैं पहले ट्रेड नहीं करता था, पहले मैं ट्रेड करता था, और ऐसा नहीं है कि एक ही ट्रेड पे मैंने खूब सारे पैसे नहीं बनाए. I made that kind of money also in trade, but I've lost out also. But still, I mean, I would, two things. First of all, I would definitely recommend it, and second, I would really want these strategies to remain a secret, so that only a limited elite few know about these, this kind of a strategy.
No, this was my first course, and I'm glad that I opted for this one. I have not attempted to do anymore. Definitely, we have already recommended to my friends also with the groups on the common groups which Jay is on also.
Yes, in past, yes, but trust me, it was not worthwhile. This course really meant something. Absolutely.
Yeah.
Am I right?
Yeah. I think one of the things I would say definitely value for money. That's one USP. I think that's the major USP. Value for money, and probably his trust on us, and the way he has also mentioned that. So definitely yes. Not because I'm just giving an interview or giving a testimonial.
Of course, I would recommend.
No, in fact, this is the first course that I've taken on stock trading. So I'm not very conversant with. I've been reading a lot, but not gone through a formal training program.
Yes, I would definitely recommend to whomever I feel need this, to some of my friends and who are also in similar boat.
All right, guys. So that was that. I will just close this. And yeah, so we are open for questions now. So you guys can unmute yourselves and go ahead with the question, or you can even put it in the chat box since there are a lot of us. You can just put it in the chat box. So what would you like to know? Yeah, so Dibendu has a question. My question: I tried to enter into internship in under traders, but most of them are interested in teaching, but not in practical experience. Open to help on free just to gain practical knowledge. Yeah, so I mean, so whether they're trading or not, we don't really know, right? So yeah, that could be one of the reasons. And yeah, so a lot of them actually make more money from teaching than from trading. So for me personally, I make more money from trading. So teaching is just, I mean, this is going to be my second course, and that also came about because I thought, okay, trading is a lonely profession. Eventually you have to do something where once money is out of the way, then you have to do something which benefits, humanity as such, and you kind of create your own, you give back at the end of the day. So that's why I started. I'm on salary basis. Can I do my best after Indian market time and do well in foreign market, which is favorable to me? Yeah, of course. Now there are, you can access, I think, about 3,300 US market stocks where you can place orders and all of that. There are some companies which help you to do that. And after market hours is what we suggest. You can place orders where your entry, your stop loss can be taken care of. So once the stock is entered, the stop loss will also be entered. And you can do that. Absolutely. You don't need to be, that's what I say. I mean, it's a misnomer. It's one of the false notions that people have. Okay, one of the first things that in fact people tell me when they know that I'm a full-time trader, अच्छा लेकिन आप तो पूरा दिन मार्केट के सामने बैठे रहोगे. I do, but that is because I trade very actively. I trade a bank nifty strategy as well, which is on futures. But most people don't need to do that. You know, most people, I know that they probably have a job or a business, and you know, I also did my trading side by side alongside my business. You know, it's only when I realized, boss, this has tremendous potential, and this is actually what I like to do, that I quit my business. I was like, let me just focus on this completely. How to overcome FOMO? That's a great question. So it's you overcome FOMO once you start getting into winning positions regularly. Okay, even then FOMO will still be there. So like this Adani Total Gas, which is 300% return, is not there in my personal portfolio. By the way, why? Because I was fully invested at that time. This investor, you know, put in an additional amount, which is what enabled me to enter. My stocks I had already, you know, entered and fully, my capital was blocked. So your FOMO will always be there. So even when I look at that stock, I'm like, I wish I had that stock in my portfolio. But you don't know which stock is going to do what. You know, and FOMO is always in hindsight because you don't really know which stock will perform. You know, that is why you enter an X number of stocks, so that you know, you give the strategy enough chance to pick these kind of stocks, and they will come to your place. I may not have Adani, but I have others, you know, and you know, which are up 80-100%. So it's also fine. I mean, you know, and Adani, by the way, is up 295% since February. So you know, yeah, so the only way to overcome FOMO is when you have enough other stocks in your portfolio which are doing well, then the FOMO is reduced. I wouldn't say it disappears, but it's reduced. Hi, is there any direct relation between index up, down, with stock price up, down? Yes, there is a, not, I wouldn't say there's a direct relationship because a lot of these stocks have performed brilliantly even when the index was actually going down or when it was sideways. But of course, if the index goes down massively, okay, so like for example, if the index goes down, let's say by 10% in you know, in let's say 10 days time or 15 days time, okay, then of course you may have some ripple effect of that in your stocks. If you're already in open positions, they may be down a little bit from the peak, but they may not have triggered your trailing stop loss. If you're in new positions, because I trade with smaller stop losses, my stop loss may be hit on certain trades, but not all of them. So I wouldn't say there's a direct relation. There is some relationship. It all ultimately depends on you know, whether your stocks are actually stronger than the index or not. Remember the trend. So the index may be sideways or in a downtrend, but if your stock is strongly in an uptrend, your stock can go up 20% in a few days. Okay, there have been in the WhatsApp group, Thangamel jewelry and whatnot, you know, where those stocks have gone up and hit upper circuit on the day of entry. Now, after that, whatever may happen to the index is immaterial. Like I said, unless the index massively corrects, and those corrections are rare, you know, I'm not as frequent. So in the long run, it doesn't really matter because we are focusing on stocks which are stronger than the index. Parth says, thanks for quite a good presentation and sharing your learnings. Other than technical charts, what other things you check, like company business balance sheet or segment? Nothing. So the beauty about technicals is you don't need to check anything else. You know, your charts are good enough. Okay. And because you are not, see, I'm not investing in the stock for the next 10, 20, 30 years. Although even the investment strategy, we don't really look at, we look at some parameters which are, you know, fundamental. You can look at, the sales growth for the last 3 years, the profit growth for the last 3 years, you know, these kind of things to just ensure market cap, to ensure that you are not stuck in any bad quality stocks. Those are some basic checks that you can do, but that's only for long-term investing. For trading, you don't need anything, you know, absolutely nothing. So is there a way to develop conviction in one's analysis? Will some winner trades help it, or there's some other way as well to pump belief into analysis that encourages? So backtesting is the best way that you can actually have conviction, because backtesting gives you, you know, gives you enough of an idea as to a strategy, whether it has worked or not in the past. Okay, that is what builds your confidence in the first stage. Then when you actually start trading it live, of course you need winning trades. Okay, and more than winning trades, what you need is you need a track record of consistency where you have seen that your entries and what the stock actually did in backtesting are similar, so the results are similar. That's what builds confidence. And then of course you'll have winners also, and nothing succeeds like success, as they say. So yeah, your conviction is built by a lot of these things: backtesting, whether you're able to execute those trades correctly in the live market, and then of course finally comes the weighing trades and profits in the account. That is all what develops. And conviction it takes time to develop. It's not an overnight thing. It's not something that you can build in the next 3 months also. Okay, it will take time and it'll keep getting better. It keeps getting better and better and better and better. That's the best part. So is there any technical strategy to go for IPOs of new companies, or should go for every IPO? So IPOs, I'm not a believer in IPO investing as such, unless it's something like a DMart or whatever, one of those few things, because nowadays companies don't leave enough on the table for the IPO, and also your chances of getting allotment are also so little. And even if you do get allotment, it's going to be roughly about 14,000, 15,000 worth of shares. So that's not going to create any major difference, even if the IPO doubles, it is. But so where I track IPOs is I track IPOs to enter a few months later. Okay. So there are strategies, the same strategies that I teach. Okay. But we use them on IPO stocks, and they do very well. They do phenomenally well. So because IPO is not just the opening move is not really something in your control, because first of all, allotment is not in your control, and secondly, even after the allotment also, the amount of stocks you get in your portfolio is nothing, peanuts. Okay, so it's hardly worth spending your time over. But after the IPO, when you can buy the full quantity, is what you should be focusing on. Okay, which website for backtesting? So there is no website for backtesting. You can do it on any charting platform. Okay, and the reason for that is that I don't recommend you backtest through a software, not initially. Okay, when you are brand new, you have to do manual backtesting. Okay, so you have to create an Excel sheet. Okay, entry price, date, stop loss, and what was the final exit, whether the stop loss was hit or the exit was hit, what was the reason you entered the trade. All of these have to be manually written, okay, in the Excel sheet, and that has to cover 200, 300 trades and 5 years minimum. Okay, so if you do automated backtesting by getting a coder, or if you code it yourself, it's not going to work. You'll get results. Okay, it'll throw up results in 5 minutes or in 1 minute, what will take you a couple of months to do. But it is not going to teach you anything. You look at the results and you don't have the ability to analyze those results. I do at this stage, but even I do manual backtesting. Why? Because manual backtesting teaches you. When you do manual backtesting, your strategy itself will undergo changes. Okay, so because in the backtesting process, you will realize, oh wow, okay, this has happened several times. I need to maybe change this parameter into this. Maybe the exit should be this way, So there are several strategies. In fact, most of my strategies, where I started with one strategy, backtested it for 2 years, changed the rules, started again, backtested it for few years, changed the rules, started again. Aisa kabhi-kabhi hota hai. But what is it? It's actually you're refining the strategy without paying any stop losses in real time. So that's what you have to do, and it's a patience game. But if you want to learn, that's what I would recommend. Do you also teach option strategies? No. So I don't trade options myself. For me, unfortunately, the problem I see with options is not only does the price have to move in your favor, it also has to move fast. Otherwise, time decay, comes into the equation. So I don't prefer, too many variables. In fact, my Bank Nifty strategy, I trade naked futures. Okay. So without any kind of hedge or whatever, because I've seen both sides. So I've seen that. So again, hedging comes at a cost. A lot of conversations I have with newbie traders who says, but if you take futures, then you should always have a hedge. I said, no, you will pay a cost for hedging, but you don't see the cost on every trade. If you add the cost over 1 year, 2 years, you actually end up paying more in that cost than if a position were to go against you. And like I said, if you're trading with the trend, position is likely to go in your favor. So I don't teach option strategies. That's not my forte. But yeah, that's how it is. Okay, I'm also going to quickly put this link, which I forgot to post. Let me see if I can get it. Yeah, so for people who want to actually take up the course, this is the link which I will put up in the chat box. Scrolls up to 3 months. You can pay through Razorpay. There are EMI options as well, and there is. This is the link. This is the account type. You have EMI options, whatever. And in case you're interested, or if you have queries, you can call upon this number. Okay, that's our company's number. I'll just put that in. And in case anybody has a long question that they would like to speak out, then feel free to do that as well. You can simply unmute yourself and ask the question. All right, doesn't seem as if we have any more questions. I'm just going to give this a couple of minutes more. In case we have any last questions, then I will hang around to answer those.
Yeah, Jay, Path here.
Yeah, Path, go ahead.
Yeah. You may find it a slight dummy question.
No.
What is the difference between SEBI registered and not SEBI? Okay, not SEBI registered, I can understand. So they are not registered. But what is the difference on technicality? They have only registration or on any other things?
No, so basically they undergo an exam. Okay, so basically there is a SEBI registered investment advisor, okay, who can actually advise you on investments. Okay, and there is a SEBI registered research analyst. So research analyst can give you tips and calls, with entry, stop loss, target, all of those things. So they just go through an exam, and so they have a basic understanding of risk management, all of that. So what we are doing for teaching and education, you don't need to be SEBI registered. You only need to be SEBI registered if you're giving calls, okay, or if you're giving some kind of investment advice, okay. So we only provide education, which is why we don't need to be registered. But yeah, for people who are giving you, so let's say tomorrow somebody says, I will help you make money from the stock markets, I will give you calls, okay. Then it would make sense for you to ask him, are you registered with SEBI or not? Because if he's not registered with SEBI, actually he cannot really provide any calls. So that's the only difference. That it's just an official way. It's he's licensed to do it. It's like a insurance agent who is not registered with IRDA. You would be a bit hesitant dealing with him, right? So that's the only difference.
Okay, thanks.
Yeah, most welcome. So any queries from anyone else? Just going to give it a couple of minutes, and otherwise we will wind up the session. And I think we are right on time as well, so that's great. Okay, I think everyone's out of questions, and I think it's anyway been, we just passed the 12 p.m. time. So thank you all for, attending this webinar, and hope you learned something, and stick at it. Like I said, markets have tremendous opportunities. Okay, learn from somebody. Okay, it doesn't have to be me. Learn from somebody. Okay, it's most important. Keep learning. All right, this is a very knowledge intensive industry, and just go for it, guys. And you never know where things could go. So wish you a very pleasant Sunday afternoon, and look forward to thanks a lot, Yash. Great webinar. Yeah, we'll also send you a feedback form. I would appreciate if you can spend some time to actually fill that out, and that would be great, and that would help us to actually make our future webinars better and better. And okay, Imran Bhai says very inspiring and relevant content. This only one session has made me learn that trading is with oneself. Oh, absolutely, bang on, and not with anybody else. It's a fight with one's own emotions, psychology, and ego. Discipline, consistency, and patience are the key factors that will make you a winner. Absolutely right, Imran bhai. I couldn't have said it better myself. I think that's what it is. It's not a fight with other traders. It's not a fight with the markets. It is a fight with yourself. Surendra says, good informative session. Thanks, Jay. Most welcome. And thank you all. And look forward to seeing you all somewhere down the line.
Thank you.
Thank you. Thank you.
Thank you.
Most welcome. Most welcome. Yeah, thank you, Imran bhai. Most welcome, Asha.